Good morning. Welcome to the plenary session, Financial Services Landscape and Outlook 2025. I have the pleasure of welcoming Arundhati Bhattacharya, CEO Salesforce India. Arundhati needs no introduction. Before I start with my questions, I just thought I'll share my own thoughts. Key trend that we are seeing across locations and demographic is that customers want better control of their financial journey using intelligent and flexible capabilities. And the world is moving to hyper personalization, etc. The second trend we are seeing is creation or assembling of platforms. Financial services will become increasingly invisible and integrated in daily lifestyles. We've seen in China super apps or platforms that not only transfer money but helps you pay bills, help you buy a car, a house, insurance, etc. The two key enablers for the above is one is co-innovation or open banking, and this has been achieved recently through APIs, application programming interface, whereby developers, corporates, fintech partners all co-create. And second is democratizing data while maintaining governance. This is where I think a lot of work is happening, where data lakes are getting created, the data is getting mined, and the framework for the above requires flexibility. And clearly, for that, one needs a cloud first strategy. So, one cannot speak about a cloud first strategy without speaking about Salesforce. So, I would like to invite uh, Arundhati for her opening comments.
Thank you, Zari. I think all that you said is extremely true. And, since I've joined Salesforce, I always had this leaning towards digital, so to speak, even in my earlier assignment. And you know that we created the YONO, which actually means you only need one. So basically, a app that allows you to do banking and everything else besides. So your shopping, your booking, your browsing, everything. So that's what YONO was supposed to be. And that's what, I spent almost 2.5 years of my chairmanship, literally pushing that agenda. But the fact is, after joining Salesforce, and Salesforce is cloud native, by the way. So when Mark Benioff started this company, when he left Oracle, he started it on the cloud. At that point of time, 23 years back, it was really, really quite, visionary, because not everybody was on the cloud. And he started all of his stuff on the cloud, and he started it for the SMEs. This company became an enterprise oriented company only in the last 10 to 12 years. But before that, it was a cloud company meant for the SMEs. And the reason for that was he saw the advantages of the cloud. Now, what are the advantages of the cloud? People, have a perception, especially in India, that cloud means it's insecure, it's unsafe. But what the cloud does allow you to do, first of all, it gives you enormous elasticity. So you can go up and down in your transactions. Today is a normal day, so you have, say, 100,000 transactions. Tomorrow is a festival day. You have means just 10x the transactions. The cloud will allow all of that to be taken seamlessly, and you pay for usage, meaning that you're not creating on-prem systems to look at your peak load rather than your regular load. So you're actually paying for peak load throughout the year if you're having on-prem systems. Cloud gives you freedom from that kind of a thing. The second thing that the cloud does is basically it allows you to then outsource the security of data and that of customer trust to people whose livelihood is to ensure that your data is secure. Okay, so cloud service providers have no way of going anywhere. Their business is ensuring that your data is kept properly, privately, and is not breached. So they scan the entire world for whatever is happening and come up with fixes as soon as something happens somewhere, which on an on-prem system for an organization is very difficult to do. Okay, And the last but not least, I think what cloud does is it allows you to use very large data sets. And you talked about data. Frankly, I think data is the other big piece in this whole thing, because larger the data set and better the data, better will be the outcome of your artificial intelligence or machine learning applications. And therefore, this using of such large data sets again requires the usage of cloud. Now, if you're talking about data, if I go back to my earlier organization and I think about it, the quality of data is also very, very important, extremely important. And that is something where we have not been very attentive in the past. We need to get far more attentive now. So, I used to joke that, if you go through SBI's data set, maybe you'll find a customer who's 230 years old, and maybe you'll also find a customer who's not yet been born, because of the way the date of birth has been keyed in. People weren't too bothered about what they were keying in, as long as they were keying in something. Now, that kind of a data is not going to yield you anything. So you have to be very careful about the kind of data you're putting in. And the last but not least is the power of data. What does data do for you? See, mostly till now, it is the large corporates that have been using this data. Whether it be banks, whether it be big tech, they have been using the power of data. But India, I think, is the only country where, by putting in a platform which is known as the aggregator platform, they have actually tried to give the individual the power of the data in their hands. So what the aggregator, account aggregator does, he's an NBFC. He has a ability to gather data from all the financial sector wherever you may be present. So whether it be insurance, whether it be mutual funds, whether it be the equity markets, whether it be the banks, they have the ability to gather data from all of these sources. And you then can use your data to get the best of pricing. So, the days when the retail operations of the banks used to give pricing for retail across the board, home loans 8.5% for all retail borrowers, those days are going to get phased out very, very quickly. Because as people gather their own data and are able to present it to the banks seamlessly, the banks then will be able to give you a separate kind of a credit rating. And instead of 8.5, you can possibly get it at 6.9, depending upon what is the kind of credit rating you get. So, I think slowly we are beginning to realize the power of the data, what it can do in the hands of the people, and we need to empower people with that.
Thanks, Arundhati. Great insights. The question is, what do you make of big tech companies entering financial services? Will this lead to greater client choice or greater risk? I thought I'll share first my thoughts and then welcome yours. Banks are today more than transaction houses, and there's a deep psychology of trust, which has everything to do with credibility. And people keep talking about fintechs being a challenge, but I think trust is extremely important when you're dealing with money. And the other thing is that banks are regulated. So I think investors get huge comfort that their money is safe. But having said that, I think we discussed in the earlier session, the central bank digital currency, will that pose a threat? Because would people then want to put money with RBI, since RBI is now permitting individuals to put money with RBI? Does the digital currency of the central bank pose a threat? So that's one thought for us all to ponder about. Also, I think more than threatening banks, I think our own experience is that we can collaborate as banks, and big tech will provide financial institutions the advantage of access, convenience, speed, and thanks to APIs. Today, you can use the best of fintechs to provide solutions. So our bank, for example, has been partnering with a lot of fintechs and through API giving a lot of customized solutions to our clients. And the other interesting example I would like to put on the table is Kakao Bank, one of Korea's first two digital-only banks. It is important to take lessons from there because they became one of the most successful challenger banks in the world, turning from break even to profit in just 3 years. And the speed at which they grew from the Kakao Talk app, a popular social media app, So there are lots of learnings about how fintechs have morphed, changed the landscape, and been disruptors. So your thoughts, Arundhati?
So I really think, that this is not a very comfortable time for traditional banks. Okay. They are surely, out of their comfort zone, and they need to be out of their comfort zone. But what is it that they bring to the table, and what is it that the fintechs bring to the table? What they bring to the table is years of trust and customer segments. And what the fintechs bring to the table is agility and new types of solutions. So I think, the best way of getting across this is for people to collaborate. And, even again, quoting back to my time in the SBI, as far back as 2016, the board had set aside 200 crores, created a corpus for collaboration with fintechs. And it could be done. There were several models. So we could become a JV, we could put in strategic investment, or we could promise them transaction by transaction payments. So there were several models. And we put in an expert board, including outsiders, to determine which of the fintechs we really wanted to work with, which ones gave us some strategic advantage, whereas those fintechs wanted to access our customer base. Okay, so it had to be a win-win. It had to be a meeting of minds where everyone actually was a winner, including the customer. Okay, so I think that's the mindset that we need to now adopt. As for, the ability to consume API led applications, today, there are several things that help you do that. For instance, in the current company that I'm in Salesforce, we have bought out a company called MuleSoft. And what MuleSoft does is basically it rides over the traditional systems and creates that API layer. So you don't have to do what is called a rip and replace. You can leave your legacy systems in place. And I know of instances where 40, 42, 52 legacy systems, you run the API layer over that, and that creates the rather MuleSoft over that, that creates the APIs which can then gather the data from here, and then actually, give you that customer experience. So you leave your current systems as a system of transaction and of record. And then you create on top of that a customer experience layer. Because today it's all about the customer experience. Every single customer wants a seamless experience. They want that, they may access their accounts or the banking system from any of the channels, omni channel, whether it be physical, whether it be digital, from anywhere, whether it be on their desktop or on their mobile or whichever way they want to get in. But they want the same experience everywhere because it makes it that much easier for them and that much enjoyable for them. So, it's all a question of how we really look at the whole banking scenario. You've got to bring the customer back to the center and determine what the customer needs, and thereafter go after it. As for big tech, as you were saying, see, in respect of the big techs, they do have certain advantages. They have advantages of deep pockets as well as the advantage of agility. Okay. But on the other hand, we also must remember that banking is a very highly regulated activity. And there are two areas where I believe a human touch will always be welcome. One is in the area of health, and the other is in the area of money. In the area of money also, to have everything virtual, the newer generation are comfortable with it, the older generation is not. And if you look at India, India has a sufficiently large number of the older generation people to not be able to completely switch over to the digital in the very near future. It may happen in 15, 20 years, but at least for the next 15, 20 years, I do not see it happening in India. So they will need a physical presence. But of course, as I said, and as I think Mr. Mukesh Ambani is known for saying everywhere, digital is the way out for India for the present, at least for the next 10 to 15 years.
I would agree completely. I think next decade is of digital. But clearly, banks need to be conscious that the physical footprint will become lesser and lesser relevant as time goes by. So, in fact, in Standard Chartered Bank also, we have Standard Chartered Ventures, SC Ventures, which was an entity which was formed in 2018 to harness innovation across the bank, invest in fintechs, and establish new partnerships. And in fact, Standard Chartered has, of course, besides blockchain data, become the first financial institution to use TradeLens, a blockchain enabled digital container logistics platform. We have partnered with Truera, US based, to use the model intelligence platform to improve model quality and increase trust by analyzing models. So I think every bank is finding their own ways of being relevant in the present fast paced change that we are seeing. So, how does one go about narrowing the digital divide, particularly in a country like India? Your thoughts?
So I think, that is something, Zareen, where you've touched on a real raw nerve. Because, the digital divide is what is really increasing the gap between the haves and the have nots. In a way, digital is a blessing. If you look at it, let's not look at it from the FINS lens, look at it from the EdTech lens. Okay. If you look at the quality of education that is imparted in the rural areas or even in the municipal schools in the urban areas, and the quality of education that is imparted in private schools, this is widely different. And as a result, what happens, almost 60-65% of our population is not getting the quality education that they really need. Now, this can all be made good through the digital platform. Because then what happens, the best of quality of education can actually be rendered anywhere. But doing that needs you to have access. And if you go into the rural areas, there is a problem of access. The problem emanates from two things. First of all, they don't have the appliances. That means they don't have the smartphones or the iPads and things like that, which enable them to access. And the second thing which they don't have is the broadband connectivity. So that is very uncertain in many places. India may have really reduced the number of dark places, but the number of gray places, as I call it, is huge. And it's even there in a city like Mumbai. I remember, in between, I was staying in a place which was one of those high-rise towers, and I used to go around the entire house, with my mobile, trying to find three lines, a place where the signal is good. And my husband would often say that you look as though you're going around with a Geiger counter, trying to see where it is radioactive, kind of thing. But so the fact of the matter is, our infrastructure needs, especially in this area, are huge. And the investment therein has not come to the extent that is probably required in a country as large as India. So if you're looking at actually meeting up the digital divide, it is very important to have the infrastructure in place. As you know, Geo has, in fact, there again, they have declared in their AGM that they are going to come with devices which will enable even the people in the rural areas to actually get smart devices at very low prices. And we are all looking forward to that, because actually that's what's going to narrow the digital divide. Even today, for instance, if you look at 65-70% of the Indians, the first screen they own is a smartphone. And they use it for all kinds of things. They use it for communication, they use it for entertainment, and they also use it for business. In fact, small businesses are hugely empowered. If you look at your neighborhood grocer or your neighborhood medicine shop, I always just send them a WhatsApp and they send me the medicines. That's what happens. Because they will come and they will take a copy. When they deliver the medicine, they'll take a copy of the prescription, and that's it. Or what I do is I take a photo on the camera and send the prescription along with the requirement for the medicine to the medicine shop. So, the amount of empowerment this has brought in to small businesses is huge. But I think, we still have a long way to go in order to bridge this divide. And this is something that is really, what should I say, that needs a lot of attention from a lot of people in order to ensure that this happens as quickly as possible.
Yeah, I would agree. In education, I think we need creative solutions to bridge the divide and the network connectivity gaps. But I think one doesn't need to have a streaming option for school education content. You can have an offline kind of mode of education, and there are various ways. I'm sure things will evolve. And one place where one has seen a huge amount of lift of use of data is farmers who are starting to use various apps to improve the whole productivity, weather, storage. They're able to find what are the prices in the mandis, which mandi should they go to sell their products. So clearly, digital is helping, and especially now one has a lot of platforms in different languages. It's not necessary for them to be conversant with English. So clearly, I feel quite upbeat that digital will definitely bridge the gap. Obviously, the gap is still very large. So, my next question is your view on the role of open banking to drive future growth. Clearly, one is seeing that it clearly meets a lot of the needs of the customers today. The whole API banking that is happening, it's enabling faster, more flexible access to services and data. So, your thoughts on that?
So I think, it's one of those things that whose time has come, in the sense that, if we are talking collaboration, if we are talking agility and nimbleness, then, open banking is surely one of the answers. It may not be the only answer, but it's surely one of the answers. Because if you have a platform that allows other players to come in with their products, then you're not, caught up in reinventing the wheel. Instead, what you are doing is you are using your time productively in order to answer the customer demands, which is, getting the best of services, getting a whole range of services, and ensuring that, you are thereby improving your bottom line, as well as ensuring that you are using the best of technology. So open banking is something, I think, that really is here to stay. It's going to happen. The quicker we understand that and we empower banks to sort of, work on it, I think there is.
Geetika, can you be on mute, please? Geetika? Yeah, sorry, Arundhati.
No, no, that's okay. So, so I think, open banking is an area of huge interest, to most established banks. I'm sure Standard Chartered must be looking at it as well. And as a IT company, we empower open banking. We have the solutions for them. And in fact, we are trying it out in one of the banks in India as well. So, to that extent, I think this is something which we need to take advantage of, because it's going to give us that flexibility, agility, and that nimbleness without having to waste further time.
Yeah, actually, in Standard Chartered, we have a platform called Access, which is the bank's open banking platform. And by sharing our APIs, we invite developers, corporates, and fintechs to partner and co-create digital experiences. In fact, as a group, we have a catalog of about 168 APIs. India being leading. In fact, Standard India is about 40% of that. And clearly, I think the move is towards open data, actually.
Absolutely. Absolutely.
My next question is, to what extent can digital banks disrupt traditional retail finance? So we are seeing, for example, in Hong Kong, we've launched our pure digital bank. And now in Singapore also, as we'll be launching, we're partnering with a few players. And I talked about Korea, Kakao Bank, excellent example of a disruptor bank. So, to what extent do you think a pure digital bank will disrupt retail finance?
So, I think where retail finance is concerned, a digital bank has a very good chance. Very good chance. And again, I say this because India is a young country. If you look at our median age, it would be somewhere between 26 to 27. And the youth are, they are wired differently. They can understand digital applications far faster than we can. Not only that, they also have less issues about sharing their data and their requirements, and that enables the digital banks to sort of very quickly come up with solutions for them. So, to the extent that it may disrupt retail finance, yes, I believe that is something that's more than likely and more than possible. Whether it will also disrupt and look at the entire gamut of banking, and the gamut of banking is not only retail finance, that I think is a little way off still. It's not going to happen all that quickly. uh, the other thing that I said, and I said this earlier in my conversation, India also has a very large number of people who are not of the younger generation. So, while our average age may be 26 or 27, we have a very large number of, in absolute numbers, of people who are past the age of 45, 46. Okay. Now, I think that particular population is still not amenable to putting all of their money where they don't know where it is. It's all in the ether, and they have no way of physically accessing it. I don't really think that is something that's about to happen very, very quickly. Again, I wouldn't predict anything beyond 10 years or 15 years. But at this point of time, I think they can be challenger banks, they may be disruptors, but whether they will disrupt the entire banking system, no, I don't think they will. And I think this is also somewhere, this is a space where the regulators have to be really, really on their toes, because it's very difficult to pin down exactly what is happening in these digital banking spaces. Regulators in India have already sort of clamped down on these very many apps that provide you loans and then send goons to your place if you're not repaying. So they've already clamped down on that, and that's the challenge ahead for the regulators, to keep a step ahead of these people and to ensure that what is a regulated space, they don't allow regulatory arbitrage to help out these companies, but ensure that there is a level playing field for all. But having said that, they still will give solutions, which the masses look for, and as long as they're providing solutions, there will be space for them.
Yeah. In fact, our Hong Kong digital only bank is the CEO is there in the 12:30 session. He's going to talk of the digital bank, which is a completely cloud-based bank built from ground up with resilient infrastructure. And now Mox, we call it Mox, is leading the in launching Asia's first all-in-one numberless bank card. So clearly, the nimble architecture that is built ground up is enabling the bank to do a lot of innovative things in Hong Kong. And it's been a very, very pleasant experience in terms of the number of customers who've sort of adopted. And it's quite encouraging, the first signs. It was launched last year.
Mhm.
It is often said that we are moving to a platform based environment. What is your interpretation of how this will look? And follow-on question on exploring partnership with fintech ventures versus launching your own digital platforms.
So, I think regarding platformization, I have no doubts, that that's the way to go. And especially, if you want to ensure that a very large number of small entities have access to the same applications that large entities can afford to put up on their own, platformization seems to be the way. If you look at India, in any case, India has shown the way in platformization by creating the UIDI platform, the Aadhaar entity. They've also created the UPI platform on which so many of the players play. And I was just looking at the numbers. In July, I'm told UPI did 3.2 billion transactions worth more than $80 billion. Okay, and the RBI is saying that by 2025, per day transactions on the UPI platform will be more than 1.5 billion. So that's the power of the platform. Anybody and everybody can latch on to it and build on top of it and then deliver. So we've had experience of the Aadhaar platform, We've had experience of the UPI platform. Now we are getting the experience of the account aggregator platform. We've now also got the Open Rails, the Open Credit Enablement Network platform. So I think, platforms are what will enable small businesses and small banks to have the same kind of facilities that big banks could have. So, if you look at democratization of services, it can only come through platforms. It won't come in any other manner. Okay. So I think it's a very, very important play, the platform play. It's a very important play. As for the collaborating with fintechs, I already told you, I believe fintechs have something to give, and I also believe established banks have something to give. Established banks have the trust and the customer base, and the fintechs have the agility, the mobility, and the imagination to think out of the box. Now, the two put together actually can be a very powerful combination, extremely powerful combination. And that's what we should aim for. There's no point in, sticking your head in the sand and pretending that nothing is going to happen. Things are going to happen, and traditional banks have to sort of get their heads out of the sand and believe that yes, things are changing very fast. And if they don't change or evolve along with the times, they are also going to be as extinct as the dodo. So they have to sort of evolutionize themselves, and that can only happen in partnership. That can happen with an open mindset. That can happen with the understanding that the future is going to be very different from what it is today. If you look at the pandemic, what all has it proved to us? Yes, it has been a terrible personal loss to a lot of people. But what the pandemic has done has really reset the entire story to a omni-channel presence, to owning your customers, to having your customers at the center of everything, to ensuring that your employees can work from anywhere. Means, believe me, I joined a new industry in the midst of the lockdown, and for 17 months now, I have operated from this corner of my bedroom. 17 months. There's not a piece of paper anywhere. Okay. Everything is on the platform. And I have been out only 3 times on office work. Okay. Through this entire period. And that too because I chose to be there. I chose to visit those customers. Otherwise, I need not have left the office at all, or rather the home at all. So, that's the power of what has happened. And that's the power of digital, where you can actually access anything from anywhere. And you have to allow that for all of your stakeholders. Now, for all of that to happen, we really need to believe that the future is going to be different from the past. Even if this pandemic ends or becomes endemic, I do not think we are going to go straight back to the past. But of course, we must take the best of both worlds. The collaboration that used to happen when we were in office, I don't see exactly that kind of collaboration happening at home. Okay. So obviously, I want that collaboration, but I also want, in one of these terribly dreary, rainy days of Mumbai, I want to be in my home and work. I don't really want to wade through the water. Okay. So I should have the ability to do that. So that's the future we are looking at, a future which will take the best of both, put them together, and come up with something that's entirely different. And that's true of the financial sector as well. They need to take what is best of the traditional banks, put it together with what is best of the new challengers, and then come up with an offering which people find to be really compelling.
Thanks, Arundhati. Thank you so much. Very insightful thoughts that you shared. And I think we have little past our scheduled time. So the next session will be starting. Thank you so much for joining
Thank
us.
you.
Truly
Thank you.
appreciate. Thank you. Bye bye.
You're welcome. Thank you. Bye.
End the session. No, end the session. End the session.